Welcome to Mission Oriented, a veteran crowd podcast that showcases veterans' talent from both the private and public sectors. Their impact is everywhere, and we are here to uncover it. Joining us today is Mike Sherbakov, Marine veteran, venture capitalist, and managing partner at the Veteran Fund. From humble beginnings as an immigrant to building and investing in mission-driven startups, Mike's story is one of gratitude, purpose, and leadership. Here's your host, Bob Louthan.
Welcome, everybody. This is Bob Louthan. Welcome to the Mission Oriented podcast on the Veteran Crowd Network. My guest today, been a friend of mine for quite a while, Mike Sherbakov of the Veteran Fund. Mike, welcome to the program. Thank you for being my guest today.
Bob, thanks for having me. Grateful to be here.
Before we got on the program, Mike and I were talking a little bit and catching up on some things. We got a lot of stuff to catch up on. We're just going to do it in the course of the call, but Mike is a Marine, and I wanted to drill into that. But at first, I think you have an interesting story because you're an immigrant to the United States. And I think that's an interesting part of this whole journey for you.
It is. It definitely plays an important role in what I do today, and certainly the appreciation that I have for the opportunities that have been provided for myself and my family. It certainly plays a part in how much I love entrepreneurship and startups, and certainly our mission at the Veteran Fund, and just a love for this country and wanting to make sure that we continue to move this country forward on a leadership level, economic development level, technological level. It kind of all those things intersect in my story, which we'll dive into over the next little bit.
I think you came, if I recall correctly, you've got a very entrepreneurial family. You're not the only one who's launched some businesses. Is that correct?
Yeah, I guess, is it helpful if I just do a quick,
Yeah, please.
30,
I think,
30-second?
yeah,
Okay.
yeah.
Yeah. So, just to where you started, Bob, I was born in Russia. My parents met in Moscow University, and very fortunate. And I think about this often. I talk about it with my friends often, that I've expressed the amount of gratitude I have to my parents for having made that decision to come to America, because life would be very different had that not happened, had my parents not provided those opportunities for our family. So 5 years old, we moved to the Bay Area. We started with nothing. I mean, if there was a way to have less than nothing, that's what we had. I think my dad actually borrowed money to get this red Hyundai hatchback that to carry my sisters and me. And we lived. I tell this story. We lived on a hill on a street called Cutting in Berkeley, just outside Berkeley in El Cerrito, California. And yeah, my dad borrowed money to get this car. And it was such a rundown car that when my dad would go like barely pick us up from school, sometimes the car would start, sometimes it wouldn't. But
Uh,
when we got to the bottom of the hill to try to go up and park in our driveway, my sister and I had to get out of the car and walk up the hill because it was just too much weight with us in it for the car to even honestly make it up the hill. I remember it like so vividly. We'd get out, we'd walk, and then the car would pull in. And I say that because like incredibly humble beginnings, and here I am watching my parents work incredibly hard. My dad was an entrepreneur, is an entrepreneur, had a very unique skill set in the software engineering space, and developed a very valuable skill set. Worked with a number of companies. Eventually, worked with a company called Maxim, where him and his team developed the audio chip that goes into the iPhone.
no.
So you kind of watched my dad do this entrepreneurial thing. My mom was an incredible mother. Like I mentioned, I have two older sisters and a younger brother. My mom was the one that ran around and took us to all the tennis tournaments and all the sporting events. And she was just all in. She was always the parent sitting there, kind of watching us play. And then after the kids moved out of the house, my mom started teaching, and she was a teacher for 20 years. And so, just real quick, because I think it paints a really important story. My oldest sister ended up going to Stanford, then worked at Bain Capital, and just created an incredible life for herself.
Yeah.
My other sister got a full ride to William and Mary, ended up getting her doctorate in neuroscience. And then my little brother ended up getting his master's from Berkeley, worked at Palantir, did a brief stint at a company called Peregrine in the Bay Area, and then he's been at OpenAI for the last 5 years.
Yeah.
And then so I paint that picture because imagine what life had been like had my parents not done that, and if we didn't come to this incredible country.
Was it in the mid 80s that your parents immigrated? Probably, I'm
Uh,
guessing.
we came in 1990. Yep, I
In
was born in
1990, so right
85.
after the Berlin Wall fell, you were able to immigrate. Interesting.
Exactly. And I remember we a lot of stories back there of exactly how difficult it was to get the whole family here. A lot of things had to happen in a certain kind of sequence of events in order for that to happen. And again, I just am so incredibly grateful. So I paint that picture and I lay the foundation because it is fundamental in shaping kind of who I am and what I care about and how I spend my time. Um, Meaning that was my parents' journey, my siblings, and for me, 9/11, Bob, hit very close to home. I think we all remember where we were when we heard the news. And I was kind of on this same path as my siblings. And 9/11 woke up something inside of me where, I felt it was my duty, it was my responsibility, this country that had provided so much for my family and me. I was an 18-year-old, young, healthy male. I wanted to challenge myself. I felt invincible at the time. I think like a lot of 18-year-olds
Right.
are.
Yeah.
And I ended up enlisting in the Marines. Actually, did not even tell my parents until about a week before I was getting ready to be shipped off to boot camp. And so, very unconventional path. And ended up doing 5 years active duty as a Marine. I ended up down in San Diego at Camp Pendleton and ended up staying there for 20 years. And just the wave tops, which I'm sure we'll touch on a little bit, ended up doing my undergrad, fell in love with entrepreneurship, again, in many ways following my dad's footsteps and seeing this as the vehicle to create change. I think, my personal thesis around this is we can only do so much as individuals, as one person, and to me, organizations, companies, businesses are extensions of individuals. You end up alchemizing. You take an idea, right? And this is the Founder Institute thing. You take an idea and you create something tangible that delivers a lot of value to many other people from it. And so to me, a business was a natural extension of the things I cared about. So that's why I loved entrepreneurship. There was also no ceiling there. It was very kind of merit based, very performance based. You build a great business, you provide enough value, and you can build a great life for yourself. And so I had some success as a startup founder in the health and wellness space. I ended up transitioning to the investor side of things about a decade ago, making angel investments, launching the accelerator program, which I'm sure we'll touch on, Founder Institute, and now running the Veteran Fund, which
I'm smiling
is really my
because you
life's
just have
work.
like the killer resume for this whole industry. I'm envious of you and in certain respect. Did you launch a business right out of school after you got out of the Marine Corps and right out of school? Now, of course, you would be a little bit older than the average college graduate at that time.
That's right. So yeah, I did. I did launch a business as soon as I graduated, and it was primarily a function of I was looking at what opportunities were available to me and the kind of life I wanted to live and provide for my son. So I also had my son when I was quite young, when I was 20 years old. He's 20. He's 20 now, which is crazy to think about. And I looked at what opportunities were available to me, and these kind of starter entry level jobs were just not something that where I could afford to provide for myself and for him and to live in
Hmm.
San Diego. And so it was almost a forcing function in that I've heard this quote before. It says, when your why becomes big enough, you figure out your how. And my why at that time was I need to support myself, my son, his mother, to live in San Diego, which is not a cheap place to live. And so I did a few different exercises around what am I good at? What experiences do I have? How do I make money? This kind of icky guy, if you're familiar with that concept, that model of, what you're passionate about, what you're good at, how you can make money and the impact you can have in the world. And the first company I started was a brick and mortar franchise company. I called it HMS Fitness, which are my son's initials, Holden Michael Sherbakov. And it was also Heart, Mind, Soul Fitness. Because what I knew at the time I was in the Marines. I was a martial arts instructor, a mech
Right.
map instructor, and so I knew how to train people. Right, I had done that for thousands of Marines, translated pretty well to kind of the personal training, group training aspect. For anyone that's familiar with F45s or Orange Theories or things like this, these are boutique group fitness
Right.
classes. And I ended up setting up a franchise model of that and scaling it to a number of locations,
Did
which
you
I
did you
ultimately sold.
bootstrap this thing? Because
I did.
franchising in itself is a financing model, if you will. You're using other people's money to grow the network. But how did you raise money or bootstrap or
No,
combination of that?
for that one, it's a really great question, Bob. For that one, it was I did a lot of research around this and I needed to find something because I didn't have a lot of money. I'd come out of the Marines. I had just finished doing my undergrad and yeah, I get to use the GI Bill. But at that point, you know, college was paid for, but I need to, you know,
Right.
need to have the means to pull this off. And so between the different opportunities I was exploring, I looked at the one with the lowest financial commitment barrier. And the model was a very interesting one, Bob, because instead of getting actual facilities, which we ended up doing down the road, living in San Diego, where it's sunny the
But
majority
go
of
to
the
a park.
year, that's
Yeah.
that's the ticket. So you get a permit at a park to host these classes. The only overhead for me was buying equipment, and I bought medicine balls and dumbbells and bands and all those little things. And it started with one little location at Carmel Valley Rec Center in Del Mar, California. And there was a very specific model, and I followed it to a T. I went to the Del Mar Highlands and I went to all the businesses that were in that little district, that little shopping area, which is a very affluent area. And I told all the business owners, I walked in the doors myself and said, business owner, I would love to invite you to join and come to this boot camp for free, which is, by the way, is right in your backyard. And I run 4 sessions a day. We ended up doing six later. You come for free. Please invite anyone that you know. And they
Mhm.
would tell their employees, they would tell their customers, and all of a sudden this thing, grew very quickly to over 100 paying members on auto pay at $200 a month. So
Hmm.
that was the model: is get them in to this recurring membership model. They'll maybe come on average 2 times a week, even though
Mhm.
they have the opportunity to come much more than that. And then the overhead is incredibly low. The permit fees are incredibly low. And again, it was something that I knew well. So it was that intersection of, again, what I was good at, what I had experience with, what I like doing, and how I can make money.
When did you stop working in the business and be able to work on the business? Let me ask that question. Did you figure that out early on or?
Yeah, and again, I have to give credit to Fit Body Bootcamp because they really gave us this model. They've since changed it because we were allowed to use our own name at the time. Again, it was my business was HMS Fitness. Fit Body Bootcamp now, when you open them, most of them are brick and mortar and you have to use their name, and they are much higher franchise fees, something like 150, 200K plus royalties and all that. So I really did. I kind of followed their model to a T. And the moment I think when we crossed 30 or 40 paying members on recurring revenue, then I hired trainers to help me because it was just me running these boot
Right.
camps. It was pretty easy for me to do. But as we started to scale, and that was 2 months in, probably less than 2 months, where I hired my first person, a gentleman named David that I knew from Bay Club, which is another kind of club in that affluent community there in Del Mar, and then yeah, scaled pretty quickly from there.
Gosh. Okay. Now that's really interesting. We're gonna get into a few other things in a moment. You're listening to the Mission Oriented Podcast on the Veteran Crowd Network.
Isn't it time someone figured out a hassle-free military discounts? With Veteran Crowd Rewards, it all starts with a simple, one-time sign-up. Just use your existing Visa card. No extra apps needed, no repeated logins. Just set it up once. Seamless rewards forever. Use your card as you normally would. Every time you swipe, tap, or click, our system recognizes your purchase automatically. Sign up today at veterancrowd.com and get rewarded the way you should have been all along.
My guest is Mike Sherbakov. Mike, um, fascinating foundational story, but you've got your hand now in so many things I almost don't know where to start. Um, so I'm going to ask some general questions, and first I want to talk about involvement with a great organization. I think you might have known Todd Connor, but Bunker Labs and now IVMF and that, and they're doing some great things for the entrepreneurial community. I think that ties in. Then we get into TechStars, and we get into the Founder Institute. All of these things are somewhat interrelated, but you sit at the intersection of those organizations. Um, and you talked about being an angel investor. So obviously you sold a business. You've been, I think you started three businesses. Am I right?
Two,
Two?
well, two that I've sold. And I want to clarify that these aren't the life-changing tech outcomes, right?
Right.
They're good enough for me to have taken some time off,
Mm-hmm.
a couple years if needed, to think about what was next. And yeah, without going into detail, the second company is called Karuna Towels. This was my first social venture, social impact.
Mm.
And we sold yoga towels. If ever anyone's ever done hot yoga, it's the towels you place over your mat, anti-slip, antibacterial, antimicrobial. And I had read a book called Start Something That Matters by Blake Mycoskie. And I really like this idea of one for one. Blake Mycoskie is the founder of Tom's Shoes. So this is we were kind of, buy a net, give a bed net, or buy a yoga mat and towel and give a bed net to a family in Africa. We had partnered with the Against Malaria Foundation. This was my kind of first dive into social entrepreneurship.
Right. I don't know how you have time for all this. You're juggling a lot of balls at the same time. I got to say, I got to compliment you. Let's dive in on the Founder Institute. I was fortunate to participate in the veteran cohort about a year ago. It was brutal. I got to tell you, it
It's
was a lot
tough.
of hard work. But tell everybody about the Founder Institute, and you know, I think it has ties to some other organizations. But let's talk about that for a second.
Yeah, so Founder Institute as an organization is uh, over 12, I think, coming up on 13, 14 years old. And it is the world's largest pre-seed startup accelerator. So I like to say we're an on-ramp to the larger accelerators that are more seed stage, like Techstars, 500 startups, and kind of the most famous, notable accelerator, which is Y Combinator,
Hmm.
known as YC. So Founder Institute, the way their model works is it started in Silicon Valley, and they said, what if we do a distributed model where we have chapter leaders in different parts of the country and the world that take this curriculum and kind of create their own programs or cohorts around it. I, again, was living in San Diego. I knew I wanted to support startups at scale. After I had done HMS Fitness and Karuna Towels, I was starting to do more of the advisory work. I mentioned I started just kind of startups would reach out to me and say, "Hey, Mike, I know you've done this before. What are your thoughts here?" I'd advise a little bit here. Again, maybe do a little bit of investing, very small angel investment checks. And I wanted to find a system to do that at scale, and Founder Institute was perfect for me. So I ended up launching the program in San Diego, and then with my business partner Ryan Micheletti launching the veteran vertical of the program. And what that means is JP Morgan came in as a six-figure sponsor for this program. And what we wanted to do is provide all veterans a fellowship to go through this program for free. Again, it's been around 12, 13 years. Several unicorns have been minted through this program. And it is absolutely, to your point, it's brutal because entrepreneurship is brutal. It's not meant to be easy. And it's a 13-week, we call core program that founders go through. They can be at a different stages in their company. Some are 0 to 1, meaning they have an idea, and we're trying to get them by the time they graduate to have an MVP, a minimum viable product. Others come in and they have something there. Maybe they have a few customers, maybe they have a prototype, some kind of MVP, and then we're helping them scale. But regardless of where they are in their journey, as you experience, Founder Institute is a structured curriculum, step by step. It's not a learning program. It's not watch a bunch of videos and that's it. It is a doing program that requires roughly 30 hours of company building work. Not busy work, not homework. This is These are important things you have to do to actually build your company, like talk to customers, like come up with the revenue models, right? Like the marketing and branding exercises, like legal incorporation, being a Delaware C Corp. So there are, very firm requirements in order to complete the program and graduate. And on average, and Bob, you experienced this, 20%, across the globe, 20% of founders that start the program finish. In the veteran, program that we run, again, with the honest and direct feedback, it's roughly 15%.
Yeah.
15%. And what that means, we're in the middle of a cohort right now, and we're right on those numbers. We started with 100 founders in this program. We're now just over a third of the way through the program. There are 19 founders left in the program.
Gosh. I feel good. I just put my head down and
Yeah.
just kept right on slogging. I I I got to tell you, I just at one point I just got there. I was like, look, there's no way they're going to stop me. So it was
That's
just
well,
perseverance and perspiration, I think.
well,
But it was a great program.
well, Bob, this is, to be quite honest, you're even further validating our thesis at our venture capital firm, the Veteran Fund.
Right.
People ask, why did you come up with the Veteran Fund? While most firms are focused on industries, right? They say we do that, we do invest in defense, we invest in cyber, we invest in CPG, fintech, prop tech, health tech. They're very segmented industries. We took a different approach and we said we are going to invest in a founder archetype, which is the military veteran, someone that's raised their right hand, someone that's demonstrated these skills of leadership, resilience, and purpose. Just like you said, we are 100% the investments we make. We are looking for the founders like you that put their head down and say, we're going to get it done. Because
When
that
did you guys come up with this concept? Because I think I'm a little bit of a person who was ahead of my time. As I go back to 2008, and that's when I said, man, there's a difference between veteran-led businesses and the non-veteran-led businesses. But when did you and Ryan come up with this idea?
in 2022,
Hmm.
yeah, and what prompted this was actually a founder institute portfolio company, Refactor, led by an Air Force veteran named Mike Frazier. Ryan had worked closely with him, and Mike sold his company Refactor for 55 million. He walked away personally. Mike Frazier did with 35 million. He called Ryan and said, I've got this big liquidity event. Uh, Founder Institute was helpful for me. You've been helpful for me. I want to invest. I want to give back to the veteran community. How do you think I should do that? And Ryan then called me because I was going, he knew I was launching a VC fund. And I always have to give him credit. He was the one that said, Mike, I know you're about to launch a VC fund. What do you think about launching a fund focused on military veterans? And I like to say that was the light bulb moment for us. We knew, oh, that's it. Again, Bob, you were early to it. You knew that in
It still have
2008.
to have a great idea, but there's something different about the chemistry and the leadership.
Yeah, again, I want to clarify. It's not that here are the numbers just as they are. We looked at 5,000 companies in Fund One to invest in 25 companies. That
Man,
is looking
that
at
is
a
a
lot and
real low
investing in very few.
percentage.
It's a very low percentage. And that is by design. So I want to clarify we're not just randomly giving money to someone because they are a veteran founder, but
Right.
when we find, you know, a good a great team, find a great product, big enough market in this area that we care about called critical technology, companies advancing America. We have decided that that founder archetype of military veteran that's demonstrated those values they learned during their time in service, that's the type of founder we want to bet on.
So let's talk about the state of the venture capital industry just generally. Within the last 5 years, it's been a little bit of a roller coaster ride. What do you think from and taking a temperature of the overall industry right now? What do you think are the important trends that are happening? There's certainly a lot of money seeking deals. At least I conceive it that way. But what do people need to know when they're thinking about venture capital?
I think the number one thing people need to know is If you don't need venture capital, don't take it. Unfortunately, it's been glamorized, and we see it on
Yeah.
LinkedIn. This company raises giant Series A, giant Series B. We see these giant numbers being thrown around. Mira, the former CTO of OpenAI, raises billions. I think $2 billion before she even had a product out, and people get kind of disillusioned with all these numbers, and they start to falsely think that the the success metric, the desired outcome, is how much capital you raise. That is just 100% false. The goal and the desired outcome should be to build a great company that you deeply care about that impacts a lot of people. And the byproduct of that is you've built a great life for yourself. You provide enough value to people through the companies you build, you end up being, it's the do well and do good model.
Right.
So I think every founder needs to first ask themselves, do I actually need to take venture capital? Because as I talked about, 5,000 companies investing in 25, most companies do not need VC. People can build a great lifestyle business for themselves. They can bootstrap this. And they can, many, especially now with the low code, no code tools, with AI, there are so many things you can build without capital. The idea of VC is really you have something there. You've demonstrated that there's a demand signal, and now you want to pour gas on the fire and you want this to hit a hockey stick curve, right? It's not linear growth. We're not looking for linear growth year by year. We're looking for exponential growth. And so I think that's one of the most important things. Number two is you mentioned the kind of the roller coaster. It's important to understand that there are cycles in VC.
Right.
In 2021, in a ZERP environment, zero interest rate, you had what very frothy, right? You just had cash being thrown around. You had incredibly high valuations. You had almost no discipline. You had a bunch of people jumping in and being investors because they
It
had liquidity.
reminds me of 1998,
Yes.
similar.
And what ends up happening, and this will always happen, historically, to your point, you're going to have these cycles. After that, there's going to be a tightening up. And what we're seeing even now, I mean, it started probably 2 years ago, but it's happening now. Those companies that took on all that capital early at unreasonably inflated valuations are now having to take either, sideways or down rounds, right? They
Mm.
raise it too high a valuation, they raise too much money too fast, they burn through it, and now they're in really tough positions and they're shutting down. And by the way, the same thing happened on the investor side. People that were these tourist investors that jumped in and weren't diligent and weren't disciplined with their investment thesis, that just threw cash at anything they could, their portfolios are down. And their LPs, their investors, are mad at them because they said, "Why did you invest in these companies at these unreasonable valuations?" And now, you're judged on prior track record, so they're not able to raise subsequent fund two, fund three.
Let me
So
ask you a hard question. So,
yeah,
25 companies invested, there's a saying in the industry, the lemons ripen first. Your expectation would be that how many of them would do great? How many of them are kind of muddle along and in the middle? And how many of them do you think are going to fail? I mean, have you got you've got to have some thoughts on that.
oh yeah, we think quite deeply about all this prior to ever taking capital on. I think people misunderstand the VC industry. We are also very much startup founders in that we go, yes, we put our own money into the fund, but we are raising capital from what we call LPs, limited partners, right? Those are our investors, and we have a legal obligation to make good investments. We are fiduciaries of capital. People don't realize that. We can get sued. Our investors, if we make a bad decision, can sue us and say, "Why did you make this investment?" It happens all the time in venture. So that's an important piece. People think, "Oh, venture capital is this glamorous
Yeah,
industry." It's
I've been
actually
there, done
okay. You've
that.
done it. Yeah, yeah.
Yeah.
So yeah, to your point, Bob, there is for what we call a portfolio construction model. We had to decide, well, how many companies we going to invest in, how much allocation, what percentage of initial versus follow on, and then we have to model it out. Which ones do we think, what percentage of companies in our portfolio do we think are going to be the breakout, which are going to be moderately successful? Which one do we write off? And for folks that aren't familiar, we have what's called the power law in venture. And the power law essentially states that it is one or two companies in the portfolio that return the entire fund. So that's how venture is really based. You're kind of aiming to have one winner or two winners out of the 25 companies that achieve the 100x return on an individual portfolio company basis. And that then translates to roughly a 5x, we call it an MOIC, multiple on invested capital for our investors. Now, I'll say in our 25 companies, in terms of lemons ripening early, we've had one shut down.
Yeah.
The other, which, 3 years later is actually still very strong. We have 24 that are still going. And of those 24, we have some that are on track to, they're already in the hundreds of millions, where, from a valuation standpoint, where we got in quite early. We come in at roughly somewhere between a 10 to $20 million valuation. We have some that are on track. We kind of say, are they ahead? Are they on track? Or are they behind? And right now, if I'm just over generalizing, I could say about a third are ahead, a
Mm-hmm.
third are right on track of where we want them to be,
Mm-hmm.
and a third are behind. And again, I want them all to succeed, Bob. It's like, your kids, you want
Well,
all the companies to do well, but
well,
the
you're a
numbers,
cheerleader, a coach, and a slave driver,
yeah,
depending on where they are in the portfolio, I guess. We had
yeah.
I'm going to date myself, but a long time ago in the first fund I participated in, I can joke about it now that we had a balanced portfolio. We had three IPOs and three bankruptcies. So, well, anyway,
But
it
here's
happened.
an important the important distinction, Bob, is the interesting thing about venture is it's asymmetric, meaning that the most you can ever lose in venture is 1x your
Unless you get
investment.
sued, you can, yeah,
Yeah, right. But
yeah,
just like but the asymmetric upside of that. So in those
right.
examples, when those companies went bankrupt, you lost 1x your investment. It sucks, but you did whatever you invested. I mean, let's say $1 million. The upside potential of that, though, is 100x. So the most you'll ever lose is 1x. The most you'll ever gain, there's no ceiling on. And that's the exciting
And
part about
people are
venture.
happy with, their returns in the stock market, but, we had a portfolio return of, not bad, like 177%. I mean,
Hmm,
it's and that's an IRR, so it's over a period of years
right.
as well. So that was that. I guess we were. Sometimes it's good to be lucky. Uh, hey, is crowdfunding a thing right now? What's going on with that? Is that a piece of it? I've been in and out of crowdfunding, but I'm kind of curious the state of the industry.
Yeah, I think there's first an important distinction. There are generally two types of crowdfunding. There's reward-based crowdfunding and equity crowdfunding.
Right. I'm referring to
Reward-based,
the equity
the
crowdfunding
equity
company.
crowdfunding. Yeah,
Yeah,
great.
as a source of
Uh,
capital.
Yeah, equity crowdfunding certainly is. I often tell founders that there's a specific archetype of a company profile that works best
Yeah.
for crowdfunding. Certainly, the three big platforms are Republic, Start Engine, and WeFunder that folks use for that. There are other platforms, but those are kind of the main ones. I like to say if a company already has an engaged customer base
Yeah. They can
and
own a
they've been
piece of the
with
company. Yeah.
yeah, people love the idea of owning a piece of a company, right? Especially one that they believe in. Maybe they use the products or services. So it's absolutely a viable option. The important consideration here, Bob, is when someone spins up a crowdfunding campaign, they need to understand that they are going to be raising from generally what we call like unsophisticated investors. These are not
Right.
professional investors. And for that reason, it's important to set a very reasonable valuation or cap. And because most folks don't know otherwise. If you tell them we're a $20 million company, they go, awesome. If you tell them you're a $100 million company, awesome. They don't know the difference because they're investing, $100,000 or $100, $1,000, maybe 5,000, right? Where that shoots the founder in the foot is if they raise in a crowdfunding campaign and then they actually go to institutional professional investors like us, VCs, that then price the company, that value the company. And we go, wait a second. You raised at $100 million valuation in this crowdfunding campaign, but you
Wow.
have, 500,000
Does
in
that really
revenue.
happen? Evaluations that high? Oh my
Oh
goodness.
yeah. Oh yeah. We see it all the time.
You guys have got the garlic and they got the cross out when that stuff comes across probably. Hey, one of the things that you talked about is is doing good, and you're doing some great things. There's a do great things moniker out there. I
There it
asked you
is.
what 1111 was, and I hope you'll share that. But you've got some projects going on that recurring projects that are charitable in nature, and I wanted folks to hear about that too.
Yeah, thank you, Bob. The quick story on this is over 13 years ago, I was invited on a house build project in Mexico. What that means is we left San Diego on a Friday morning. We took vans down to a town in Mexico in Baja called Maniadero, 2.5 hour drive. And in one weekend, from Friday to Sunday, we built a home for a family that was living on dirt. And when I say dirt, I mean dirt, actual sticks, pallets for walls, broken tarp for a roof. Whenever it rains, mud runs to the home. Just like very, very terrible living conditions. And in one weekend, boom, house goes up, 2 bedroom, loft, insulation, electric. And so it had a really profound impact on me. And I decided that I wanted to do it more consistently. So I decided to invite some friends back for a build, and it just kind of kept building and building from there. And I'm really proud to say 13 years later, we continue to do these trips. We did them on a quarterly basis for almost 10 years. So every quarter, every January, April, July, and October. I'm actually going back. It's October 8th right now. I'm going back in 9 days.
Yeah.
And this is something for me that's very important to do. These trips are open to our community, by the way. This is kind of a philanthropic thing that I run called the Greatness Ventures. And it, it, first of all, there's something incredibly tangible about it, right? A lot of
Mhm.
stuff we do in VC just is like so zoomed out and big, and we're so long, like long timelines, right? A lot of things we invest in, we don't see come to fruition, 5, 7, 10 years later. There's something about these projects where you're there for 2 days, 48 hours, and in
Right.
48 hours, you've changed the course of this family's life forever. And to me, that's very meaningful. And I guess to come full circle to your question about 1111, um, I it's very simple. I started off this conversation by just saying how grateful I am. I do not take lightly that life is a miracle, that I'm incredibly blessed. If someone's listening to this right now, that means they've got lungs that breathe and a heart that beats and a mind that thinks and ears that listen. And that's a miracle in itself. And on top of that miracle of life, the blessings that I've had, and the people that have helped me along the way, from my parents to my friends to my coworkers, I do not take this life for granted. I think I and we are incredibly blessed. And so I set an alarm on my phone at 11:11. It just goes off every day. It's a sign
Mhm.
alarm, and the label on it is stop, breathe, and be grateful. And really what it is it's just a very small, even if it's 5 seconds, it's a daily reminder that, sometimes I'm in the thick of it. We're navigating complex deals, we're thinking this and whatever's going on in the world. It's this moment just to stop and say, how blessed am I? How blessed are we to be alive right now? Um, that's
That's
11:11.
that is a great way to wrap up our conversation today, Mike. I love that story, and I'm glad we finished up with that concept. Thank you so much for being our guest today. I really appreciate it.
Thank you, Bob.
You've been listening to the Mission Oriented Podcast on the Veteran Crowd Network. My guest has been Mike Sherbakov, a great entrepreneur, venture capitalist, Marine. Mike, thanks very much. I'll throw out an Army Bravo Zulu to you for your performance today. And that is a wrap.
Thank you for listening to Mission Oriented. Make sure to hit the subscribe button and you won't miss an episode. To learn more about Mission Oriented and the Veteran Crowd Network, visit us at veterancrowdnetwork.com. And if you're part of the military community and tired of the hassles that come with military discounts, it's time to check out Veteran Crowd Rewards. Head over to veterancrowd.com and link your existing Visa card today